I am forced to look at a shorter time span. So here we are going to use my stocks just for technical analysis. So this is the ever-ready 10-year chart. But as you know, we cannot use this. You cannot use a 10-year chart for like a 3-month period of trading. We need to understand what has been going on. The best period to analyze it is 2 years. Why 2 years? You get to know what happened between when COVID started and now. So during this period between COVID and this time, what has happened around Everready? Has it recovered yet to its pre-COVID price levels? So as we continue, you can see that it's kind of recovered. Actually, it already recovered. And there is something in a market called gapping up and gapping down. So you can see during the recovery, sometime around May, Everready actually gapped up. Gap up meaning when it closes today, tomorrow it opens at a higher price. So that is what it happened. And most of the time during gap ups, this gap is usually filled. But in this case, it didn't fully fill it. But here's the thing, because we are going to be holding short-term positions, it doesn't make sense to look at long-term charts. So this is just a 2-year chart. I am using 200 moving average, 50 moving average, and 100 moving average. And as you can see, this market has been obeying the 200-day moving average. How do I know that? Do you see here at the very top? There. At this point, sellers stepped in and decided to exit their positions in Everready. It did that again, got to the 200-day moving average, and people started selling again. So chances are high Everready is on a downtrend. Why? The 200-day moving average one, it is already on a downtrend, and this has proven to be a very solid resistance. If we are to look at support, if it's something like Everready, the best support is 1 shilling. So 1 shilling will be the best support and it will be the best resistance. So let us scale down. We already know 1 shilling is the level to look at. So how has Everready been performing around the 1 shilling price mark? So now let us scale down to a shorter time span, 6 months. So in the past 6 months, what has been going on around Everready? And here it is. As you can see, it has just been playing on around this level. 1.1 is the maximum Everready can give you. I don't know what can push it once again to above maybe 1.2, but you want to buy on the dips. Everready can easily go down to 0.9 shillings. So this is Everready, and that is just how you can do a bit of a technical analysis. So you can see with the moving averages, they are kind of like in a straight line. So chances, this note is, it's not like chances, it's showing you that the price has been consolidating, and it's evident, you can see it for yourself, between 0.9 and 1.1, 0.9, 1.1. So if you are trading Everready, you want to buy at 0.1, no, you want to buy at 0.9 and exit at 1.1, because that is the range in which this stock is playing at. So why not scale down further? Let's give it a 3 months. So we see if this consolidation is actually showing in the 3-month chart. And here it is, just playing around 0.9 and 1.1, 0.9 and 1.1. That is Everready. So if you're buying at 1.1, just know that the best price you can sell it at is 1.2, but the best entry for Everready is 0.9. So why am I talking all about this? I am a technical trader, and I believe that during this period in time, technical analysis will work best. So let's look into a different company. Everybody has been buying. I know some of us, if we have already done this, we have Safaricom. Safaricom, why? It's something everybody's using and it's in everybody's subconscious. So one way or another, we're going to buy Safaricom. Personally, I will not touch Safaricom. Here is why. Let us go back 2 years. Let's look at the 2-year chart. I already have it on auto update, so it just updates itself. Best price to buy Safaricom, it is 35 shillings. Why? 35 shilling was one of the best support that this counter found. And if we, let's say, if we go back in time to see if this is a good level to buy. So if you're a long-term holder, if you're looking at Safaricom, 35 shillings. But if you are to scale out, you see 30 bob is, or 30 shilling is the best price. Why? It is the most favorable even number that is close to the current market price. So if it is not 40 shillings, it is 30 shillings. But if it is a quick drawdown, if it ever gets to 35, best entry. But if you're looking at long term, 30 shillings. But here's the case. For this competition, we cannot do that. This is just to help you through your long-term analysis, because eventually you're going to apply these skills with real money. So you can see Safaricom has been on a downtrend, finding resistance at around 43 shillings. And this is the monthly chart. Best entry, 40 shillings, slightly below the 200-day moving average. You're wondering why I am mentioning these moving averages. Our market significantly obeys moving averages to the roots. And that is the truth, and that is what is happening. So for the 1 month, you can see Safaricom, keep your distance. It's not going to make you money. If anything is to happen within this period of 3 months, maximum Safaricom can give you, maximum, it is 45 shillings. If anything happens, it pulls up seriously before the end of January, before the end of this competition, it is 50 shillings. That is the maximum it can give you. If it hits 50 shillings, people will start selling like crazy. So that is all profit taking. Safaricom, short-term holding, no, unless it dips to 40 shillings. If it ever dips to 30 shillings, I don't know. But 40 shilling is your best entry price. So if you're interested in Safaricom, you can get into it and maybe with your own personal money and hold it long term. But for this challenge, I am not so sure how you can make money from Safaricom because it has exhausted itself. The kind of bull run we have had with Safaricom, it has exhausted itself. Let me even just show it to you. So that is Safaricom. As you can see, it has been on a continuous uptrend since 2012. 2012, actually, it has been obeying the 50-day moving average. So it goes, touch the 50-day moving average, recovered. COVID came, touch the 50-day moving average, recovered. COVID scare came in because there was a point where like, oh, no, COVID is going to hit us again. Things might not be so good. And as a result, there was a slight pullback. It touched the 50-day moving average and recovered again. And now you're wondering what these green dots are at the bottom and at the top. These are called parabolic SAR, and most of the time they indicate a reversal. So when you see the parabolic SAR at the bottom, chances are high this market will push higher. The moment you see the parabolic SAR, this dot at the green dot at the top, most of the time it indicates that we are going to see some kind of pullback or correction in the markets. So that is why you're seeing these green dots. For I, it's not something I use to make entry or exit points. It's just to show me if there is a possibility of a reversal and if the price is showing it. So if the price starts showing signs of recovery, you usually see maybe 1 dot or 2 dots at the bottom. So that tends to be favorable. And as you can see, when this parabolic 2 dots started showing up, it is when it found support at the 50-day moving average and started recovering. So at around 35 shilling was your best entry, and you just let the market do what it wants to do. And let's go back into one last chart. We all use banks, and the most popular bank around that everybody chases around, it's either Equity or KCB. So let's start with Equity. Chances are high those in the competition already have Equity in their holdings. Why? These are the names that we are most familiar with. And if you're familiar with these names, it's automatic you're going to get into them. So this is the 10-year period for equity. So you can see it's made a top here, it peaked. And when the market peaked at around this region, it started pulling down. So it went through a very long-term correction from 2015 all the way down to 2017. But here's the thing I told you, these parabolic SARs, these green dots at the bottom, sometimes they really tend to guide you through to be able to have an idea if a reversal is about to happen. So when these green dots started forming, and it showed that the market is about to reverse its trajectory from a downward to probably an upward move, and that is what has been happening. And as you can see, this level here, 50 shillings, actually 50 shilling is the best resistance for Equity Bank. So it goes around 50, between 50 to 60, but around here, it's around 56. 56, there was resistance, and this high was at 57. Resistance started pulling back down. Went on again, another resistance at around 54 shillings. So you know the region between 50 shillings and 60 shillings, that's the best price equity can give you. So if anything happens between now and before elections that is favorable to the market, equity will give you a maximum price of 60 shillings per share, maximum. But you want to enter lower. You want to enter at 40, long-term holding. We are in this in the short term, so let's start with the 3 months, actually 2 years. So we know what has been happening between when COVID hit and now. So this is what has been happening. So since January 2020 and today, best resistance is 55 shillings. And as you can see, this market was unable to break above 55 shillings. It did reverse at this point. And as you keep on going to your right, it found resistance again at 55 shillings. So the base is around 50 shillings. So why 50 shillings? It's the most reasonable psychological price we are familiar with. So that is why 50 shilling can hold. But you want to buy it lower. Best price to buy it, it's at 40 shillings. Why? The moving averages. So if you are to look at this price deviation, it has deviated further from its average price. So anytime you want to look into any asset, you want to buy it around its average price within a period in time. Gives you a best entry. And if it is a very solid asset in a very solid bull market, but it is encountering some pullbacks, any level below the moving averages or the average price within a period always tend to be the most favorable entry. So the moment COVID hit and Equity Bank was trading below its 200-day moving averages, 50-day moving average and 100-day moving average, that was an automatic buy. You just buy as long as it is below. Just keep on increasing your holdings, increasing your holding. The moment it goes above, stop buying. Just let it be. So this is what I do. For you, you're going to learn what you're going to do for yourself. And the last one, or no, I will not go through another one. I will give one of you or two of you an opportunity to ask which stock we can analyze, and we're going to analyze it in details from a technical perspective. So price, volume. I did not touch on volume. Let me go back on volume. You see the top part of my chart, these green and red lines. These are volumes, meaning at these prices, people bought the most shares. So if we are to look here, this is the longest green candle we have, meaning at around this level, this price that was here, people were buying, and people buy at the low. So you want to know at this price where volume was high on the upside, what was the lowest price? So if you are to look at the price, you can see on the right, the lowest price was 35 shillings and 45 cents. that was the price at which people bought heavily. Volume always tells you the price in which people are buying at. Let me scroll down and show you. So when you have an account with my stocks, you have the advantage of real-time market data in terms of price. So this is the real-time order book of Equity Bank. So this is the real-time order book. So it happens real-time. The advantage of having this account, you can get to know what is happening there and then. So you can see here, this is the bid side, rather the price in which people want to buy. This is the ask side, or the price in which people want to sell. So you can see the buying volume is 256,000 shares. The sell volume, it is 224,000 shares. So automatically, this is a buyer's market. Why? You can see people really want to buy equity. You can already tell by the volumes in which that was trading today on the buy side. And we move lower. There is splits. Splits, it is the number of traders who want to buy at this given price. So at 50 shillings, we have 11 traders who will be purchasing 228,000 shares. That is what this data means here. Split, how many traders are buying at this price and what quantity are they trading. But then you go to the other side, the sell side. So you can see when you look at the splits, the market participants, the individuals who are selling are very few. Only 2 people are selling, 3 people are selling at 51 shillings, 2 people are selling at 50 shillings and 50 cents. One person is selling at 51, like that. But if you go to this other side, the best price to first look into or pay attention to, it is 50 shillings to buy equity. But from my technical understanding, 50 shillings is not the price to buy. 50 shilling is the price to sell. The price to buy is the next most reasonable high volume price. So which one is it? 49 shillings and 50 cents. That is what the order book is telling us. And that's how you can be able to read the order book data. So the order book data, these volumes, this quantity that we have just discussed on, compiled on a daily basis, that is the volume that makes up this kind of green candle. So on this given day, or probably this is a monthly chart. So on this given month, why is this a monthly chart? Because this is a 2-year period. On this given month, there was a demand of 30 million shares of Safaricom that was bought between the lowest price was 35.45 and the highest price of 36.9. So 30 million shares traded hands between 35.45 and 36.9. So let us scale down on this. Let us look at in the past 3 months. How are the volumes? So here are the volumes. This is the 3-month data. This is the daily chart. The volume is here. So this green, this red over here, this shows the price at which we saw very heavy selling. Not that heavy, almost maybe about 5.3 million shares were being sold at a high price of 54 shillings per share. When you scroll down here, this is where you can see the price here. So if you're wondering how am I able to know the price in which that opened, the high price, the low price, it's here, and even the close. So at this point, people sold at 54 shillings, highest sell volume. If we continue down, let us go now to the most recent days. Recent days, this is around, let me see if it will give me the date. Yes, October the 15th. So October the 15th, we saw 5.14 million shares being bought. Do you know why? Look here. The reason why people are buying at the 100-day moving average. And that on that day, that is the day in which we saw the highest volume being purchased. The 100-day moving average, it is this line here. I don't know if it's red or maroon. Sometimes I think I'm colorblind. I don't know if it's pink. Please forgive me if I say it's pink, but that is the color my eyes are seeing. So at this level, we are seeing buyers stepping in. So chances are high, the reason why people are buying such huge volumes at 50 shillings, it is because of this, the 50-day moving average. This has attracted a lot of buyers. And as you can see during this period, as from when did it touch, as from October the 14th, it has been unable to go below it. And why is this a healthy one? You can see the averages are on a slight uptrend, meaning the momentum or the price demand is going up. So people want to buy or keep on buying equity group. 50 shillings. But here's the thing, I always pay attention to the 200-day moving average. 50-day moving average or 100, not as much. I look or pay attention to the 200-day moving average. And it is telling me the best price to buy on the 200-day moving average, it is at around 45 shillings per share. If I am to ever buy equity, my first entry will be 45 shillings. I hope you are taking notes and you're going to ask me questions after this. So we are done with technical analysis completely. I'm going to leave this running just in case. Oh, something else I forgot to mention. Do you see here the 52-week range? This is like the range in the past 52 weeks, or the range in the past 1 year. So if you want to know the price range in which the stock played in the past 1 year, this is where you look at. So it was playing between 32.65 and 55 shillings. And you can already see the close of today at 50 shillings is very close to 55 shillings. So chances are very high this price might, if equity crosses 55 shillings this year, that is a good thing. But I am not, my odds of it crossing 55 shillings are very, very low. So if you're to ever buy equity now, you're looking for a short-term hold, exit at 55 shillings. Done. So now let us go to the NSE platform. I believe we all have this. So I have already logged into my platform. So when you log in, this is what you see, the first screen. We won't look at online classes, we're going straight to the virtual trader. So the virtual trader is the platform in which you're going to use to play around this. And now let me sign in. So the virtual trader is the platform you're going to be using to play and understand how the local market works. And for I only entered yesterday. Yesterday I took my first trades and I learned a lot. Within this period in time, I have learned a lot and I've come to realize that day trading in this market is very possible. But here's the thing, the commissions are just too high. If you are to become a day trader in this market, please do a lot of practice on this platform in this 3-month period in time, because the trading will be introduced this month on the 22nd. So it will be launched this month. My advice is, if you want to become a day trader in our market, please learn a lot, get to be able to jump into these big market price actions. And this is the only way you can be able to make money as a day trader. If not, you're not going to make money at all. So unless we are lucky enough that the NSE will reduce the cost of trading, but if not, from what I have seen, it will not be easy. But there are different strategies. And not probably, the NSE has organized various programs for us. So they're going to bring in their own professionals who we can be able to ask questions as to how we can be able to kind of day trade or make quick money within a span of about 48 hours and take advantage of the market. Personally, I am testing things out. So this is what you're going to see, but you want to go to the contest. You go to your contest tab, click on contest. Once you have clicked on contest, it's going to bring you to a different page. And on this page, this is the page in which that you're going to be using to place your trade. So if you have not joined the contest and you're trading, it's going to take you to a totally different account. I've realized that today with me, because we tested out this before. There was a time I was making trades and I realized, wait, I'm in the wrong account. So I was using my other account, not this one for the University Stock Market Challenge. So make sure that you're here. And once you're here, you click on, for you, maybe it will be here, join contest or something else, but you come here, click on make trade. So when you click on make trade, make sure that you are trading on this platform. Today, I made a big mistake and not a mistake. You see, we are doing this to learn. So I realized I was actually on a totally different platform, not this one that we are supposed to be placing our trades on and being ranked upon. So for you, this is what you're going to see. One, you need to have an overview. So an overview, how have people been performing? But before we do that, actually, let's just start on there. So we just start on overview. We start on the very first tab as we move forward. So on the overview page, when you click the overview page, yes, this is what you're going to be seeing. So this is how the overview page looks like. And this is Mary Ann. I cannot remember this other lady's name. And you can see starting investment 100,000, join participants, blah blah blah. But this is what you want to pay attention to. Trading end date 28th of January. So on this day, if you have a trade, they're going to close it for you automatically. And you will not be able to trade again as from the 29th. So this account will be closed and they're going to do a final tally. So top 10 contest ranking. So we have Denver, we have me, we have Dennis and all that. But here's the other thing that I find a very big disadvantage. Yes, I think it can be an advantage. Yes, this can be an advantage. Why? When you are trading, you can be able to place a lot of trades. And because of the number of trades, you can be ranked or you have an advantage over everybody else. Meaning that if your trade numbers are higher, it's like when I said when you have cuts, when you do your cuts, you're given an opportunity to increase your chances of passing your exams. So this is the case here. So the number of trades that you do gives you the chance to improve your ranking. And as for today, what I realized it is that even Dennis already mentioned it in the group. The best way to do this, even when I started, I mentioned that look at small counters, the penny stocks, and the small stocks, like 2 shilling stocks, 1 shilling stocks, and all. You can trade them a lot. It will only cost you 100 shillings. So if you say you're going to spend 100 shillings just trading this stock, you can make like 10 entries a day or 9 entries a day if you include transaction costs. So that already gives you like an advantage. So if you're to do 9 trades, you're already here with this lady, Abby, at 9 trades. But for you, because you're trading small stocks, chances are high if you're considering cost of trade, maybe you'll only be down maybe 20 shillings or 19 shillings or 15 shillings. So your account will not take a hit. That is the advantage of trading frequency that you can take advantage of and outperform in this contest. Personally, I am not doing that. I see that capital gains matter most than the number of trades. There is somebody who places 1,000 trades a year, and maybe his account is down 5% for the year. There's somebody who only placed 2 trades and his account is 50% a year. So choose who you want to be, literally. So that is what I have come to see. For I, not really. Even if you see here 12 trades, Let me show you my account. So no, let's just go to the next one. So from overview, we go buy and sell. Make sure when you're buying and selling, you're buying and selling here. If you make a mistake and you're in your older account, you can place a trade and you might not be aware that you're not in this competition account. So buy and sell here. So buying order, so as you know, this is how it looks like. So when you want to buy any stock, you just come here, security ID, and choose the company that you are interested in. So let's say BAT. I'm not buying this, I'm showing you. So here I'm showing you also why buying BAT doesn't make sense. The minimum you can buy is 100 shares. So if I'm to buy 100 shares of BAT, my account is automatically in the negative zone. I cannot afford BAT. 430 shillings per share, 100 shares of it has already taken up 43% of my portfolio. So BAT is a total no-go zone, as I told you before. We are in this for the short term. Trading big counters will not make you money unless something happens. But if they make you money, I don't know how. It's not easy for these big counters to give you like a 10% or a 15% gain in a week. It's not common. Yes, so let's leave BAT alone. So let me just show you. So 100 BAT. Always make sure that you have written down your trade notes. Apparently, these trade notes gives you points. So make sure that you have written down your trade note. So why are you buying BAT? Is it technical analysis? Is it fundamental analysis? You can't just say you're buying a stock for the sake of buying it. It doesn't work like that. For an investor, you must have a reason why you are buying a company. So we are done with buying. So once you're already written there, you just place your order, then it automatically fills you in. But this is what you want to look into now. Sell. Once you already have your holdings, even if on the platform it is written T plus 0, I thought that you can actually close your trade on the first day. So yesterday made that mistake. So when my account was up 5%, I took some very serious risks. I was trying to close my position, they refused. Then I knew I was in big trouble, like literally big trouble. The kind of trouble I was in yesterday, my account could have quickly taken a 5% hit. So picture 5% hit of 80,000 shillings. That could have been bad. So I'm like, okay, now this is not good. My account was up 4,000 shillings. But if it was a day trade, I could have exited before close. But because we cannot day trade, you are forced to hold your holdings until the next day. And if anything happens the next day, your high performing holdings tend to pull back because of profit taking or people wanting a favorable entry. It will not be so good for your account. So picture you have 100 shares of BAT. Today it is up 2%, tomorrow it is down 4%. So you're automatically at a 6% loss because there is a 2% commission on each and every single trade. So picture 6% of all that money. Yeah. So yes, on your sell side, you come here, click sell. You can only sell the shares you have. So for I can only sell NCBA, ABSA, Centum, Britam, CIC, and all this. So I can only come click here, sell, Home Africa. So Home Africa, I have to select it here. So go there, look for Home Africa. It's HAFR. So Home Africa, I cannot edit the price I want to sell. I am automatically forced to sell at the price in which the market is giving. No, this platform is giving me. But when I trade myself, I usually have my own exit price. So for this, I am forced to go with what the market is giving me. So let's say I want to sell 100 shares. I write the reason why, literally just profit taking. So you can just come here, profit taking, and then you click place order. So actually you can enter positions now and you can exit now. But no, can you exit now? I'm not sure about exiting. I know you can enter a trade now, but I'm not so sure if you can exit now. But it doesn't make sense. If you enter a trade now, cost of trade 2%. If you exit now, cost of trade 2%. So on one trade today, after market has closed, you automatically have a 4% loss. It doesn't make sense. So please do not do that. Do not enter any position after market close unless you have your analysis tells you that there is a possibility that the market will gap up at open and maintain. So let's say we buy Home Africa right now 0.37, we buy 100 shares, and maybe tomorrow it gaps up to around 0.41 shillings or 0.41 cents. Yeah, maybe unless that happens, then I can exit. But you see, that is not guaranteed. Most of the time, some counters open down. So you do not want to do that. So we already bought or sold whichever holdings. So once you've done that, you come here to your holdings. So your holdings, it is like your portfolio. So in your entire portfolio, which positions do you hold and how are they performing? So for my portfolio, I am testing things out, but because I'm a technical trader, I'm trading the way I trade using technical analysis. But sadly, at this price, I can only enter and exit at the price that this platform is giving me. So I cannot enter and exit at the prices I want. So for me, it's a huge disadvantage. So I am forced to do something I'm not used to. So this is how you can get to know your holdings. So this is how my portfolio has performed today. So you can see some of them are doing good, some of them are doing bad, but you always want your winners to be more than your losers. And these are the positions that I am holding. And how will they perform? I do not know. So during this period, I've come up with a different strategy. I'm going to have my invested holdings. So the ones I have now, these are my invested holdings. So I'm holding them until the end of the competition. Then I have my trading holdings. So now you see these small ones, these ones that increase the volume of your trades or your market activity. So Kina Uchumi, Everready, Home Africa, Transcentury, these 100 shilling, these 1 shilling kind of trades. Those now are the ones I'll be playing with just to increase the number of trades on my platform. But these are the ones I'm investing in. How will they perform by the time it's the 28th of January? I have no idea. I told you I am a technical trader, so I enter my trades based on technical analysis only. So if I see a good chart, I see a good setup, I get in. So that is pretty much it. So my account today, it is up 1,311 shillings. So that is about 1.9%. And I have invested 68,531 so far. So from this, the 30 something thousand left, that is what I'll be using just to play around with. Getting in, getting out, like today, tomorrow, like these small trades I mentioned, the penny stocks, just to play around the penny stocks. The rest, I'm going to hold them. So this is how my portfolio looks like as for today. And I don't know how it's going to look like by tomorrow morning. Things change by market open. And as you know, I told you, I already lost the 500 shillings I had made today because I exited some trades. And yes, the market went up significantly in the morning, but on exit, I did not consider the transaction costs. So I'm like, oh my God, I just lost almost 400 and something, almost 500 shillings on transaction costs only. So literally all the money I made went. So once you can see your holdings, then you can come here, look at your transactions. So on your transaction, you see the trade notes I was telling you. So these are the trade notes. Where are they? Here. So trade notes are the reason why. So why you're getting into a position. So why am I buying this? So let me just go and take you through one. So why did I buy 500 shares of NCBA at around 24 shillings? So my reason was strong support at 24 shillings on the yearly chart, and the RSI shows signs of the ticker being oversold, and the market is in consolidation. probability of the bears losing strength. That's the reason literally why I bought NCBA. I told you I'm a technical trader. But if it was I interested in NCBA, I wouldn't buy it today. I'd wait for NCBA at 20 shillings per share. That's the best price to buy. But this, I was telling, I was just buying purely on technicals and also just to test out this platform, how it works. And like today, the one that made me good money, I don't know what I could have stayed with the Bank of Kigali. I had a very good holding. So the reason why I bought Bank of Kigali yesterday, 8% correction on the daily chart, favorable entry for a short-term trade. That's literally the reason why I bought Bank of Kigali. And here I exited Bank of Kigali at 28.75 shillings. Bank of Kigali will go to 30 shillings. But I was like, let me take some profits. Suddenly, you see the cost of transaction? As I was telling you, this cost of transaction eats all the money you made. So when I sold Bank of Kigali, it costed me 241 shillings on transaction costs only. When I got out of Nairobi Business Ventures, cost of transaction cost me 210 shillings. So I'm telling you, this is the lesson I learned. So I'm telling you, so you do not end up making these mistakes and realizing you're losing big money. And from then onwards, like you see, I sold NBV today at 5.28. Reason being the market had a quick crash, not crash, but correction. It actually fell down to 4.91 shillings. And you can see the amount I had put in was not little. So I took another 221 shilling loss. Not loss, but cost on transaction. So today only, transaction charges, I've lost 700 shillings on transaction charges only. So yeah, that is what I have experienced today. It was a beautiful experience. I'm sharing this with you so you can be able to maneuver through this market better. As for I, purely technical, so I just see which one will make me the best money and how it's going to make me money and all that stuff. So the next one was rankings. So rankings is just the general ranking about everybody. So where is everybody at as of yesterday at midnight? So this is it. So I have no idea how this thing will look like. So just wait for tomorrow morning, take a look at this and make my decisions. So that brings us to the end of our session. So now I would like to, let me go through first the questions to see if there are any questions in the chat. So any questions in the chat? Yes, I can see Dennis. Dennis placed a buy order yesterday worth 13,500 instead of selling. This hit his account by more than 7%. So yes, be careful when placing your orders. I can see we have all had every kind of experience in this market. So now I want to open the mic. I do not know if I can see everybody who's in the session. Why? I would like to give you an opportunity to ask a question. So you can unmute yourself. You can unmute yourself. I don't know how I can see everybody. So I don't know if you unmute yourself, I will not be sure who is speaking. So let me stop sharing my screen. Oh yeah, okay, amazing. Okay, let me go back to start sharing screen again. So a question has just come in. Thank you very much, Jerry. Please guide us how to create an account for Digital Academy. Oh, so that account is pretty straightforward. The link that I sent in the group, let me resend it. I will resend it after this. So there is a link that you can use to create your account. And it is through this link. Let me post it right now. Wait. So yes, there. If you click in the group, you're going to be able to see the link. So I'm typing it. On DG Trader. So there's, I've already posted it on the group. So just in case one of you does not have a way of opening an account, so please feel free to go through that. Okay, so Jerry, what do you mean by moving average exactly? What are they? So moving average is the average price of an asset within a period in time. So let's say we have the 200-day moving average, meaning it will calculate the average price of the past 200 days. You can either set it to be at open or at close, but personally I use at close. So I look at the closing price of an asset in the past 200 days. So it takes all the entire 200 days, then it takes an average of it, and that is how you come across a moving average price. So I hope, Jerry, I've answered your question. So that is what a moving average is all about. It's all about the average price within a period in time. So the next question from Ronald. So Ronald bought equity at 49.6. After doing my analysis, now the price is at 50. Yes, 50 is a good exit, but what matters the most? I think there is somebody we need to mute. Stop playing a matatu. Okay, great. So if you are to look at so let's go back. So let me look for it. Give me a second. Where is that? So you said equity, you entered at 49.6 and it's at 50 shillings. 50 shillings is the best exit price. Why? If you are to look at the 50-day moving average, it has proven to be some kind of resistance. So if you go back in time, 50-day moving average has been the resistance and it's holding it below 50 shillings. So best price for it's 50 shillings. But if you are to exit, if you got in at 49.6 and you exit at 50 shillings, you're at automatic loss. Because you already incurred a 2% transaction cost, you're going to incur another 2% at exit. So it means if you exit your equity position now, you're going to lose money. So if you are to exit now, that's up to you. Are you willing to take the risk? Are you willing to lose money? Are you willing to hold it? So now it is entirely based up to you. So the price at 50, as I told you, if it was I could have, if I entered before, my exit on equity is 50. Yes, so Ronald, you're waiting for it to go high. I am not sure if it goes higher, maximum is 55. So if you want to exit, 55 is your best exit price. But I do not know what kind of profits that you're going to make from it. So I have seen using my stock platform, you have to subscribe. Yeah, yes, there is 1,000 shillings for the entire month, but you can subscribe 100 shillings for a day. So if you say you're going to be doing your analysis on Tuesdays, Wednesdays, and Thursdays, that's okay. So why am I saying this? Or you see on the AIB, if you have a live AIB account, you can just go and see the order book there. So the order book moves on live price action in the market. So you can use that and it's free. As much, yes, it can be a bit cumbersome, but you can use that. So for the 1,000 shillings is for the month, 100 shillings is for the day. But if you're to put 100 shillings every day at the end of the month, you'll have spent more than maybe about 2,000 shillings. So 1,000 shillings for the month is better, but it depends on you. So this is what I learned from trading the American market. Monday, this is analysis day, meaning people don't jump into position as much on Mondays. And if they do, they're looking to exit on Tuesday. But most players enter the market on Tuesday. Why? You already have an idea what happened on Monday. So Tuesday you enter. Wednesday, you let the market do what it wants to do. Thursday, you exit. So chances are high. Tomorrow, we are going to be seeing people closing their positions. Friday, the market will be quiet. Most of the time in most markets, Fridays are quiet days. So sometimes once in a while, you can get one position that moves on a Friday. But in most assets or in actually in most asset classes in through my experience, they don't move as much on Fridays. So yes, it just depends on you. If you want to subscribe for the month, for the day, for the actually it's just monthly and daily, you can do that. But that is pretty much it. So Ronald was expecting equity to go higher, not yeah, maybe 55 shillings. So we have come to the end of the session. Is there anybody who has any kind of question or an asset you'd like us to look into before we move forward? Okay, so it seems like no questions are coming in. Dennis, are you in the session? So you can maybe give us a word or two. So I suppose Dennis is not in the session. So thank you very much for taking time to be part of this. This recording will be sent immediately. If it cannot fit on the WhatsApp group, we are going to upload it in our YouTube page. So from my end, oh, Dennis is in. So from my end, it's goodbye. Let me give this opportunity to Dennis to close the session for us. Thank you all and have a lovely night. Mic to you, Dennis. Okay, so he cannot talk. It's okay. So good night. Thank you for this time. I hope you all learn and become very smart investors and outperform the other contestants who are participating in this. So thank you all and have a lovely night. See you tomorrow morning. Oh yes, thanks for the love hearts. Amazing. So see you tomorrow morning at 10:30 Jubilee Hall, room number 4 for the Forex session. And tomorrow we are going to launch another program with Scope Market. So after the Forex session, we are launching something totally new. So see you guys then. Have a lovely night.